Yeah, that'll be me, I think.
Okay.
Excellent. No.
Let's turn it down. I think I'm going to.
I've turned it off. Nathaniel?
Right now.
Has it got? I don't think it's me.
Have we got more than one microphone on?
Has everybody turned their mics off? And speakers.
That's on, isn't it? That's off. The only microphone
You might have to turn the volume on your laptop so it stops coming along.
I thought I heard it.
Sure, which I turn it on.
It's only. And only I'm the only one that really needs to be in this meeting anyway.
Strategy. Because you've got sound coming out of your speakers. Is that it?
Yes, I don't know what you did, but it's
okay, great. I think you've turned the sound coming out of your laptop.
There was two different. Yeah, exactly. But yes, you're right.
Okay, so it's 11 a.m, so we'll begin the meeting. If I can just start by reminding councillors that when they speak, they would need to turn their microphones on. Otherwise, the recording that will go out later on today, you will not be heard unless you switch your microphone on when you're speaking, which would be a shame. So agenda item number 1 is minutes of the previous meeting. Are there any comments or questions on the minutes of the previous meeting from any members of the audit committee? No? So if I can have someone propose, Councillor Taylor propose and seconded by Councillor Spencer, seconds. All those in favour of approving the minutes? That's unanimous. Urgent business brought forward. There is no urgent business brought forward at the discretion of the chairman. I'm not anticipating any need to divide the agenda during the course of the day. Declaration of interest. In accordance with the Code of Conduct, members are invited to declare any disclosable pecuniary interest, other registrable interest and non-registrable interests, including the nature and extent of such interests they may have in any items to be considered at this meeting. Do members have any interest to declare? No. So we move on to the first main agenda item of the meeting, which is agenda item number 5. And we have Mr. Gaylor here today to talk about the pensions presentation from Devon County Council. Thank you.
Okay, thank you. I think this is probably the third time I've been to your audit committee to present. I think it's probably about 2 or 3 years ago the last time I came. So just an update on where we are as a pension fund and a little bit of reflection on where we're going from here. So currently, well, as at the, I have the next slide. Thank you. So currently the pension fund, as at the 31st of December anyway, was about 5.5 billion in size. Just a reminder, we have over 200 employers paying into the fund. So that's the County Council, Plymouth, Torbay councils, all the Devon districts, town and parish councils, academy schools for their non-teaching staff, and private companies that have taken on council work where staff have been tupied to them. And we have over 125,000 members of the pension fund, which includes people paying in and people who are receiving their pensions. So we invest the money that we receive from employers and employees in contributions in order to achieve an investment return to try and keep the cost of the scheme down to a reasonable level. Next slide. We have published a provisional version of our annual report for 2021, and we're nearly at the end of the next financial year, but we still haven't been able to publish the final version because we haven't got our audit certificate, because unfortunately Grant Thornton have yet to complete the audit of the County Council's 2021 accounts. But we are hoping that that will happen by the end of this month. If we move to the next slide. So every 3 years we have an actuarial valuation of the fund, and that gives us a position statement, if you like, as to how well funded we are as a pension fund, and it also sets the contribution rates that we charge to all the employers in the fund for the following 3 years. So that's coming up as at the 31st of March. And we are working towards achieving a 100% funding position for the whole fund. Different employers will have different funding levels depending on their own data, their cash flows in and out of the fund. And I'll just talk about that a little bit further as we go through. Next slide, please. So when we have an actuarial valuation, that the fund actuary will look at all the data on the current fund members, and we'll try and work out how much we're going to be paying out in pension on the basis of service that's already been accrued by people in the fund over the next up to 80 years ahead. And that's what is represented by the light blue shape there. So what that's looking at is at the moment we will have retired members who are receiving their pensions, and over the next sort of 20 years or so of the current members of the pension fund, more of them will retire than will cease to be receiving their pension. And then as time goes on, of the current pension fund members, you'll start to see that tailing off as people leave the scheme because they've died. So the actuary is looking at how much of currently accrued pension will be paid out over each of the next 80 years. And you can imagine that somebody who is just joining the pension fund now at the age of 20 may still be alive in 100 years' time and receiving their pension then. And then they look at that shape and they say, okay, that's the sort of sums of money that we need going forward. And this is just illustrative. Don't pay too much attention to the actual numbers shown. They will then look at that and say, well, some of that will be achieved through investment returns going forward. So how much money do we actually need now in the fund in order to be able to meet those liabilities going forward? If we move to the next slide. So this shows the position as at the 2019 actuarial evaluation, the last one that we had, and it shows that we had fund assets that would fund around 91% of the total pension fund liabilities. And then for the fund as a whole, we've got an average recovery period of 19 years. So that's to get that figure up from 91% up to 100% funding. But different employers will be in different positions and will have different contribution rates set depending on their own particular position. And you will see from this that South Hams is in the fortunate position of actually being over 100% funded at the last valuation. And as a result of that, you're paying a contribution rate each year that meets the additional liabilities for the pension fund that are accrued in that year, but you don't have any deficit to pay off. And that's partly because you've paid additional sums of money in over prior years that have enabled you to get to that 100% or 101% funding level position. And that shows the advantage of that, because if you weren't at 100%, you would also have deficit contributions to pay on top of the contributions that you are currently paying to the pension fund. Now, when we look at the 2022 position, then that funding level could have changed. It could have gone up or it could have gone down. And that will depend on a number of different factors going forward. So if we move to the next slide, one of the factors that will make a difference to that is the returns that we have achieved over the last 3 years since the last valuation. If you look at that, the years with arrows pointing to them show the value of the fund at those particular points in time, which were when actuarial valuations occurred. And then between March 2019 and March 2020, we actually went down in terms of the value of the fund, largely because of the impact of COVID on investment markets. But then that was significantly recovered in 2021. So we achieved a return of 25.6% in the 2021 financial year. If you move to the next slide, I think there was a figure on that first slide that was slightly wrong, but these are the correct figures. So that shows you the returns that we've achieved in 2019-20, 2020-21, and what we had achieved as a return in the 21-22 financial year to date. And the actuary is expecting us to achieve a 5.1% return per year, and we'll calculate the liabilities on that basis. The actual return that we have achieved on an annual basis up to the 31st of March 2021 was 9.4%. However, if we move to the next slide, since 31st of March, we've seen negative markets, and that has been significantly impacted by the concerns about what's going on in Ukraine with the Russian invasion, and that has had a downward effect on equity markets and also on bond markets, and therefore when we get to the end of March, I don't have up-to-date figures on the value of the fund, but it will have gone down from the position that it was in at the 31st of December. So that will reduce that investment return, although as things stand at the moment, I would still expect that we've achieved a better return over those three years than the actuary's discount rate that was applied at the last valuation. However, the actuary will also need to assess what investment returns are likely to be going forward, and they've indicated that they probably will be looking at a higher level of prudence. And if they assume a lower investment return going forward, then that has the effect of increasing our liabilities, because we have to, if we're expecting a lower investment return, then we will need to get more in from contributions to compensate for that. So if you're looking ahead to what your contributions payable might be for future years, then I think you would probably be best off planning for a small increase in those contributions. But the actuary is required to look at keeping any increases as low as possible in order to keep contribution levels as stable as possible. So that will be a limiting factor on that. I can either take all questions at the end, or if there's any questions up to this point, I'm happy to take them now, or we'll.
Councillor Spencer.
Thank you. That's for the fund as a whole, is it? Not the South Hams part?
Well, the investment returns will apply to the whole of the fund and all employers in the fund. So we don't run different investment strategies for different employers. Everybody has the same investment strategy. So if so what I'm saying, I think, is that where you're 101% funded at the last valuation, if we're looking at a lower discount rate, then that might bring your funding level down slightly below 100%, but you will still be in a better position than most employers.
And secondly, do we know what percentages of the fund are actually invested in those individual asset classes?
We do, and that's actually the next slide. I will go on to that.
Thank you.
That's just indicative, because it's quite difficult to then look at how that then applies to the whole fund. But when we get to the end of March, we don't value the whole fund on a daily basis. We could have some provisional figures that are just being put together for the end of February, but we haven't got them yet. But That's just to give you a flavour of, we would expect the value of the fund to be lower now than it was at the end of December. Shall I carry on?
Any other questions from any councillors at this stage? No, I think if you'd like to carry on, that'd be great.
Okay, so the next slide shows our current asset allocation. Again, as at the 31st of December 2021, which shows how much we've got allocated to different types of investments. So around 60% of our fund was invested in equities of various sorts. That is split relatively evenly between passively managed funds and actively managed funds. And I'll talk a bit more about that as we go through. And then about 15% of the fund is invested in bonds, which are where companies issue debt instruments. And then you've got something called sterling corporate bonds, which are issued by companies. And then you've got multi-asset credit, which is a variety of different types of bonds, generally slightly more risky bonds, where companies have slightly lower credit ratings. But as a result of that, you get higher interest returns from them. Then there's something called Diversifying Returns Fund, which is a bit of a mix of everything. We've got just under 9% in property funds, and around just between 6 and 7% in various private market funds, which are where we effectively are either buying sort of ownership rights to private companies that are not listed on the stock exchange. And in those cases, it's once you put the money in, you have to wait until you can get the money out at a later stage. You're tying up your money for longer, but because of that, you can get some better returns. If we move on to the next slide, we now make 95% of our investments are made via the Brunel Pension Partnership. So they offer a range of between 20 and 25 different funds, and we set our investment strategy according to what we think we need to invest in to achieve the returns that we need to achieve. And we can then decide which of those 20 odd funds that Brunel provide we want to invest in. So we are not invested in all of their funds, and the amount or the proportion of our fund invested in each of them is our decision as an authority. The pooling agenda was started about 6 years ago, and the aim of it is to bring the investments of the 10 funds that are part of Brunel together and achieve savings on the fees that you pay to investment managers on that. So if we want to say put 100 million into global equities, then in the past we would have appointed a manager to manage that on our behalf. Now we invest it in Brunel's global equity funds along with all the other Southwest funds who are part of Brunel. They then have a much bigger pot that they can invest with investment managers that they appoint, and therefore they can negotiate down the fees that those managers charge. If we move to the next slide. So at the end of March last year, we had about 80% of our assets being managed by Brunel. Since then, we have transitioned the fixed interest assets, the bond assets that were previously managed by Lazard and Wellington, who are asset managers based in London. They've now transitioned across to Brunel, and now we have around 95% of our assets managed by Brunel. Now, following that, I'm going to talk a bit about our responsible investment policies. So if we move to the next slide, we get lobbied on a range of issues. Climate change is the one that dominates currently, but we would also get lobbied on investments in tobacco, investments in alcohol companies, investments in gambling companies, particularly recently also investments in companies that may be doing business on the West Bank. So we don't have an all-encompassing policy of divesting on an ethical basis in those funds, but we do have a policy of engaging very strongly with companies that we're invested in to try and push them in the right direction on these issues. If we move to the next slide. So we engage through Brunel and other partners and aim to be responsible owners of the shares that we own in the companies that we own. If you own shares in a company, in fact, you're part owners of the company, which gives you the ability to vote at company annual general meetings and to meet and ask questions of people at the company. Now, we do that through Brunel and through other organisations such as the Local Authority Pension Fund Forum. We don't have the resources to do that directly, but we do make sure that those organisations are doing what they can to engage with all companies that we invest in. As of today, the Financial Reporting Council has just published a new list of people who it has accredited as signatories to the UK Stewardship Code, and Devon County Council Pension Fund is now one of those signatories, which follows an assessment that they've done on our annual report and how we report on these issues. So that is something that is quite a good achievement for the fund. Only one other, Brunel themselves are also signatories, and only one other fund within the Brunel partnership has been accredited, and only a few local government pension schemes across the country. I'm now going to talk about climate change specifically. If we move on to the next issue, the pension fund believes that apart from the ethical and moral need to tackle climate change, that it's also a risk to the pension fund in terms of how that impacts on our investments going forward. And we do work strongly to try and make sure that we are investing as far as we can in a way that will mitigate those risks from climate change and also try and contribute towards achieving net zero and alignment with the Paris Agreement on climate change. If we move to the next slide. Next slide, please. Thank you. So we have signed a commitment that we will achieve net zero investment portfolios by 2050 or sooner. We want to get most of the way there, or as much of the way there as we can, by 2030. And we have set an interim target of seeing a 50 to 75% reduction in the weighted average carbon intensity of our investments by 2030. That's quite a wide range, you might say, but we are looking to get as near to the 75% figure as we can. Depends to some extent how the global economy moves as to what companies are out there that we can invest in to achieve that target. The fund is targeting to have 5% of the fund in renewable energy infrastructure. So we're taking that on board, that we invest across the whole range of the economy, the global economy, that's still quite a big chunk of investment that we want to make in renewable energy infrastructure. It's half of the allocation that we have to infrastructure as a whole. But we do focus not just on fossil fuel companies. We get, and Councillor Hodgson will no doubt reaffirm this, we get a lot of people who do want us to divest from fossil fuel companies. That's part of the issue. The other side of the issue is reducing the demand for those fossil fuels from all the other companies within the global economy, which is also part of finding the solution to addressing climate change. So how are we doing? We go to the next slide. Now, this shows our weighted average carbon intensity of our investments as at the 31st of December 2020. Currently, the figures are being processed to work out what our carbon intensity, carbon footprint of our investments is as at 31st of December 2021, but we don't have those figures yet. If you look at that, first thing to say is the first three columns are passive funds. Passive funds, you invest in an index, and you track that index, and therefore whatever the carbon intensity of that index is, your investments will have the same carbon footprint, essentially, because you have exactly what the index has. Where you have actively managed funds, then you will see that in all cases, our portfolio, the carbon intensity of our portfolio is lower than the benchmark. So that's saying that we are invested in companies that on average have a lower carbon footprint than all the companies on average in the index. And that is part of the way that our fund is being managed to try and bring down our carbon footprint. If we move to the next slide, this shows how our carbon footprint has actually reduced over the 21 months between March 2019 and December 2020. First measurement that we did was in March 2019, and then we moved to doing it on an end of December basis. But overall, between March 2019 and December 2020, we've seen a 37% reduction in the fund's carbon footprint. And we are targeting to reduce by at least a further 7% each year. Now, there's two things I would say about that. Part of that will be by part of that reduction will be by the way that we have moved our investments into companies that are doing better at reducing their carbon footprint. But if we're to see real success in addressing climate change as a world, then I think that means that we need all companies to be reducing their carbon footprint. And what would be ideal would be that we invested in the same companies, but those companies have actually reduced their carbon footprint, because if that's happened, then that means that the world is making real progress. The other issue that we need to tackle is around our exposure to fossil fuel reserves, which is the next slide. If we could have the next slide, please. So this shows the proportion of our investments that are exposed to fossil fuel reserves. And so if a company has any reserves of fossil fuels that contribute towards its revenue, even if that's a very, very small proportion of its revenue, then they will be included in these figures. The total fund, as you will see, as at 31st of December, had a 3.8% exposure, and this is just equities. The exposure through any of the other asset classes will be immaterial, and therefore 3.8% of 60% equals about 2.5% of the total fund. You will also see that a huge proportion of that comes from the UK passive fund. That actually accounts for 62% of the fund's reserves exposure. If we go to the next slide. And this goes down to what I was saying earlier about should we invest actively or passively. And we split our equity allocation of broadly 50-50 between actively managed funds and passively managed funds. Active managers will deliberately decide which companies they wish to invest in, and they will try and choose the companies they think are going to do well. Passive funds just track an index, for example, the FTSE All-Share Index, and they will own shares in every company in that index in proportion to their weighting in the index. Because of that, they don't need to employ vast swathes of analysts to work out which companies are the best ones, because they just invest in what's there in proportion to the index. And therefore, they charge much lower fees. An active manager will charge about 30 times as much as a passive manager for you to invest in their product, which is why we try and balance it to try and make sure that we are cost effective in the way that we manage our investments. But if we move to the next slide, that's where we have an issue with the UK in passive investment, because the FTSE All-Share has significant offenders, you might say, in terms of fossil fuels. So some of the bigger companies within that index are those shown there, oil companies, mining companies, and that is why that UK passive exposure was so high compared to everything else. So if we go to the next slide, which I think I've already talked to. So with, as I said, with active managers, they will charge you 30 times as much, which is why we invest some of our funds passively to try and keep the fees down. If we switched all of our passive funds to active funds, then fees would cost around £5 million more. Also, if the active managers don't do their job very well and the companies they choose aren't as successful as they would like, sometimes you end up doing slightly worse, and so you're paying 30 times as much for a worse result, which is why we do invest half of our equity allocation passively. But this is a problem that we've recognized, is that by investing passively, it increases our exposure to some of the companies we'd rather not be exposed to. So if we move to the next slide, the Brunel Pension Partnership has been working on our behalf in trying to set up new benchmarks that reflect the need to address climate change. And they've set up Paris-aligned benchmarks, climate transition benchmarks that will aim to invest more in companies that are doing the right thing and less in companies that are doing the wrong thing. As a result of that, if we move to the next slide, we have now moved our UK passive allocation to a new UK Climate Transition Benchmark Fund, which was launched on the 1st of February this year. And we moved our smart beta, which means that it uses slightly different indexing criteria, but we moved that to a developed World Paris Aligned Benchmark Fund, which was launched in November 2021. So just looking at that UK fund now, if we move to the next slide, as a result of that switch, we have divested £24 million from Shell. Oops, that's all. We've divested just under £10 million from BHP Billiton, which is a mining company, 7.1 million, sorry, from Anglo American, and 6.1 million from Glencore. So none of those are in the new UK benchmark, the climate transition benchmark. You'll notice that BP is not on that list. There is still some exposure to BP, and that's because the criteria that's been applied does look at some of the positive things that BP have started to do compared with the others. Now, it may be that they're still not seen as being as ethical and as forward-looking as we would like them to be, but they have taken some steps in the right direction. So if we just move on to the next slide, which just sets out some of what BP have been doing. So they do have done a lot of work in setting up EV charging points, and that just comes around to the what I was saying earlier, that we need to be looking at solutions, not just at those who are the sinners, if you like. And we still have too many cars going around using fossil fuels, and that probably won't change unless we can do something about setting up a much bigger infrastructure of charging points. Now, BP are contributing towards that, probably not enough, and if they don't make further progress, then they will be taken out of the index along with the others who've already been taken out. Next slide, I'll just say a bit about Russia. We've had a lot of people inquiring about any investments we might have in Russia over the last few weeks. As per the asset allocation table that I showed earlier, we have a target allocation to an emerging markets fund of 5%. So 5% of our total fund is allocated to an emerging markets fund. Russia is classed as an emerging market, and around 3% of that emerging markets fund was invested in Russia, which therefore equates to about 0.15% of the total Devon Fund's investments. With what has been happening with the Russian invasion of Ukraine, Brunel have instructed their appointed managers to, and this is an actively managed fund, where the managers are choosing which companies to invest in. So Brunel have instructed their appointed fund managers to sell Russian shares at the earliest opportunity. The value of those Russian shares is now a third of what it was before that happened. So we're now down to about 0.05% of the Devon fund's total investments. Now, the problem with divesting from Russian shares is that where shares have been bought on the Russian stock exchange, we can only sell them on the Russian stock exchange. The Russian stock exchange is suspended at the moment, so it's actually impossible to sell some of those shares. There are what are called ADRs, and I can't remember what ADR stands for, so forgive me for that. But essentially, it's a way of buying an interest in Russian companies on stock exchanges other than the Russian stock exchange. Those have now been sold, and we don't have those anymore, and that equates to about half of the reduction from 0.015 to 0.05, and the rest of that reduction is because what we've still got has gone down in value significantly. So we are doing everything we can to make sure that we are not invested in Russian companies following that invasion. So that really concludes my presentation. We need to, I've just got a looking ahead slide, which just says that we need to reflect on the changing world in the way that we invest. We need at the same time to make sure that we are achieving the investment returns that we need to pay the pensions we need to pay, and that has to be our number one consideration. But within that, we need to manage risks, we need to adapt to a changing world, and we need to make sure that we still continue to concentrate on that long-term performance, because although we may have ups and downs in the value of the fund, we're in this to pay somebody who's 20 now to pay their pension when they're 100 in 80 years' time. So we have to keep our eye on the long term, and we can afford to set our risk threshold on the basis of that long term.
Thank you, Mr. Gaylor, for that comment on the pension scheme. Do councillors have any questions at all? Councillor Taylor.
Yeah, and going back on the investments, the Russian investments, you said there was going to be a massive loss on the stock market. Is that capital? Does that include growth? Is that the initial capital you're losing on, or is it the growth included in that?
So these are listed equities. So it's essentially a share in a company is worth what somebody else is willing to pay for it. It's what you could sell it for if you went to the market is the value of that share. So when we value the valuation of those shares, it will depend upon what you could get for them if you sold them. So because if nobody wants to buy them, then you're not going to get anything for them. So at the moment, nobody wants to buy Russian shares. So that's going to significantly reduce the value of those shares in terms of what you could get for them.
Yeah,
Does that help?
I understand that. What I was trying to get at was, obviously the shares over years have gained profits.
Yeah.
So is that figure that you're going to lose, is that part of the profits, or is that total in?
Yeah, so
capital?
the valuation that we had would be based on the current share price as at the time that we invested it. So that where we have obtained if we've had dividends from those companies, that's income that's there and has been sort of reinvested in elsewhere. The capital value of the shares, that it represents the capital value of the shares, i.e. what they would sell for today. So if we bought them at £1 each and they were now worth £1.25, then that's what they would be worth. We would have made 25p profit per share, but they're probably worth a fraction of that now.
I would think about it, but you actually pick up dividends rather than compound.
Dividends would be received and would then be reinvested. They may be reinvested in something else. That will be at the discretion of the fund managers.
Any other questions from members? Councillor Hodgson.
Thank you. At the last Investment and Pension Fund Committee, just a couple of weeks ago, you talked about the levelling up information that had come on requests that had come through from the government. Given this is a district council who delivers on some of those things, I thought that might be quite interesting for a mention, unless you mentioned it just before I came in.
Thank you for asking that question, because that's something that I should have put in my presentation and I probably didn't. That's when I go to West Devon, I will modify my presentation and include that. Yeah, so when the government published its levelling up white paper, within that white paper, it set out plans to ask local government pension schemes to set out plans for investing 5% of their funds in what they called local investment in order to support the levelling up agenda. Now, they've since clarified that by local, they don't mean the local council, the local community. What they mean is the United Kingdom as opposed to overseas, but clearly there might be some wish to invest some money locally. So on the basis of that, they're not requiring that we instantly invest 5% locally, but they are saying that we need to set out plans for how we would need to do that. Now, that will be subject to regulation. A white paper is just a statement of intent. They will need to bring forward regulation that asks us to do that. There will be a consultation on that, and we're expecting that to come out in the summer. So when we've got that, that will hopefully provide a bit more detail on what their expectation is. Now, we don't have an issue with that if we're being asked to put money into we already have got 10% of our fund invested or committed to invest in infrastructure. That the renewable energy investment is part of that. Some of that is done overseas, but quite happy for to look at a greater proportion of that being within the United Kingdom. The one thing that we do need to be aware of is that the purpose of the pension fund is to pay people's pensions. It's not there to act as a cash cow for your whatever your pet project is. If there are things that we can do to invest locally that will still enable us to achieve the investment returns that we want to achieve, then they're things that we can consider. But we also have to be careful of conflicts of interest where people might want to be investing in things because it's a good thing for their community rather than because it's going to provide the return that the pension fund needs. But as long as it does both, then it's something that we can look at going forward.
Councillor Spencer, yeah.
I promise these will be the last two questions I'm going to ask. One, just going back to Russia. Russia's an emerging market. You never really had much in there anyway. Because the nature of an emerging market fund is that it's high volatility normally, quite often high returns, but sometimes disastrous. Is the strategy to divest yourself of all Russian stocks, irrespective of the cost to the fund, or is the strategy to try and accept the fact that the fund's strategy overall is to produce a rate of return and that these shares may produce a return? Whether that return is realizable or not is another matter. But is there an easy solution to that, or answer to that question? And the second one is, you mentioned passives versus actives. That there has always, well, for as long as I can remember, there's always been arguments in the marketplace that active funds are not worth the manager's costs, and that passive funds generally produce better returns at cheaper cost, or as good return at cheaper cost. So is there any thought on changing the balance between passives and active funds in the future?
Taking the first question first. So the current instruction on Brunel, and indeed Brunel have taken it on their own back to do this, is to sell all Russian shares as and when they can. Because it's such a low amount, then it's relatively immaterial. I mean, it may be that we will end up taking losses on some of those shares because of the current situation, but the current instruction is to sell all Russian shares. I mean there is an interesting debate, if you like, about other countries that might be within an emerging markets portfolio. It, as you say, it will be more volatile, but it should generate higher returns going forward in the long term. And as long-term investors, that's why we invest there. So we try and achieve a balance of risk between things that are relatively stable and things that will perhaps be a little bit more volatile and achieve a higher return going forward. The active passive debate is something, I mean, at one stage the government were suggesting that they wanted all funds to go passive, and there was a lot of resistance to that. Some LGPS funds feel very strongly that they've achieved a lot through investing actively and that they have achieved better returns by doing that, but there will be others on the other side who haven't achieved better returns going actively. We've tried to keep a balance between active and passive, so it's about 50-50. The rider to passive has always been that you'd have, because you've got everything, you can't manage things like responsible investment as well through a passive fund because you've just stuck with everything and you can't have any, it reduces the influence that you would have as an active investor. So that there are pros and cons to it, but that's why we try and keep a balance between, if we went all active, it would be higher cost, and the risk would be higher because of, as you say, of the potential for underperformance as well as the potential for overperformance, we feel. And we've just had an external review of the fund's investments conducted by external consultants, and their view was that 50-50 split between active and passive was about right.
Councillor McKay was unable to join us in person today, but I think when I put my glasses on, I can see that he's raised his hand on the screen. So I believe you'd like to ask a question, Councillor McKay, is that correct?
Yes, if that's okay.
Yes, we can hear you, yeah.
Okay, thank you. I mean, firstly, can I say that I was really, it was a very interesting presentation, and I'm really encouraged by the fund's approach to climate change and the thoughtful and obviously effective way that they are going about their investment strategy in that regard. So yeah, I mean, I was quite encouraged by that. My question is about the performance of the fund, really. I mean, you talked about an approximate, I can't remember the exact figure, I should have taken a note, but about a 10% return on for this last financial year. So I would like to know whether how does that compare to other funds? Is this a good performance? Or, I mean, I'm not in a position to make a judgment as to whether that is good or bad or indifferent. Could you tell me how this compares to other funds' performance? I mean, I'm always bemused by the fact that the council itself, with its own investment strategy, seems to go for a figure, is quite proud of a return of 1%. And I clearly, in the assessment of risk, you feel able to take a much bigger risk, and I'd be interested to understand, you know, to compare and contrast those two situations. And yeah, and any thoughts you have on that, I'll be really interested to know. Thanks.
So I'll tackle the last bit first. So the pension fund is a long-term investor because we are investing in funds that, as I say, somebody who's paying in to the fund now, age 20, could still be receiving their pension at the age of 100 in 80 years' time. So we have a very long-term horizon in the way that we invest. We're not expecting to need the funds that we have got some of them for many years to come. So therefore we can afford to take a higher level of risk, which then generates a higher level of return. I mean, as part of my responsibilities at Devon County Council, I also manage the council's money. But with the council's money, and I imagine the same probably goes for South Hams, it's mostly related to reserves or capital reserves that may well be needed in the fairly near future, and therefore we take a much more prudent and safe response to that, because at any time we could need that cash to fund what we're doing as a council. And all the codes on how councils, as opposed to pension funds, invest money would stress that you have to put security of your money before the return, and making sure that it is available when you need it. And in theory, if you're putting it out to risky investments, then you probably shouldn't be involved in borrowing, because you should have used the money that you've got to fund your projects instead of investing it. But that seems to be SITFA's view at the moment. So you would not expect to achieve the same sort of return on council investments as you would on the pension fund investments. In terms of how we compare to other funds, I think being honest, over the longer term, we're probably a bit under the average. Well, we are a bit under the average that is achieved. That's not to say it's a bad return. I think most funds are reasonably clustered around an average figure. Certainly, and it goes up and down, because different funds have slightly different investment strategies depending on their risk appetite and the nature of their liabilities and how well funded they are. Those who are better funded can expect to have a slightly lower risk investment strategy that will then not lose as much money in bad times. So we suffered quite bad return compared to others in when COVID hit. But then when we recovered from COVID, the return we gained over the following year was well above the average figure achieved by local government pension scheme funds. So yeah, we're not above average. We are just below average, but not by that much.
Thank you, Councillor Pearce.
Thank you.
Thanks, Chairman. I'd just like to say to everybody that since May or June anyway, 2019, I've been the district's rep on the Investments and Pensions Committee at County Hall. So I've been going to meetings for this pension fund about 4 times a year since then. And I have to say, I think I'm really quite impressed with the way all this is run. I do think that both Mark and the county team and Brunel take an extremely responsible attitude to investment. Now, the primary fiduciary duty is to produce pensions for the members of the pension fund, and that includes all council employees all over Devon, the majority of education employees all over Devon, and a lot of other admitted bodies. So it's a huge number of people they're providing pensions to. And Brunel has a really good slide that they put up at the beginning of their presentations, which is a load of mountaineers going along a very narrow arête, which is kind of like a ridge towards the summit of a mountain. And that is exactly what the pension fund has to do. It is absolutely on a tightrope, trying to provide pensions for people, but at the same time being pulled around by various people who want them to invest or disinvest in various investments. So there's been this very serious climate change divestment which has gone on. And I have to say, I think Brunel have been, I think they're, are they national winners, Mark, for divesting? But there's
well, they won they won an award for the best approach to climate change. Not that, which, as I said earlier, is not just about divestment, it's about the whole approach. And they won an award from Pensions in Europe. So not just UK, but across Europe.
Yeah, so they're doing that. Now, it looks now like they could be pulled around by government intervention and the levelling up agenda. So I think everybody has to understand that they are on this very narrow ridge going towards the summit, and all the time somebody's trying to pull them off course. Now, I'm not saying that they're bad things that are pulling them off course. I'm just saying that all those hazards are there on the way to their objective, and I think actually they do a pretty impressive job. I'm really satisfied. I actually went into it because we were about to have a triennial revaluation, weren't we, Lisa? And I wanted to find out what was going on. So that's why I got hitched up in it in the first place. But actually, that's about the least of the things they get up to. So yeah. So I'd just like to say that I really think that they are doing a good job, and you can really well, not sit back and relax, but I think you can be satisfied that the pensions in Devon are being well looked after.
Any other questions from councillors? There anything else from you, Mr. Gaynor? There is no recommendation before the committee. The presentation is just there for councillors to note. So it really just falls to me to thank Mr. Gaynor for attending and answering our questions. I have been asked, can we have a copy of the slides, Mr. Gaynor? Is that possible?
Got a copy.
Oh, we've got a copy. Right. Okay, thank you very much for attending and answering our questions, and we'll move on to agenda item number 6, which is Grant Thornton's audit progress report, and we have Mr. Murray here today from Grant Thornton. Yes, please do. Mr. Murray's just going to move chairs so we can hear him speak better.
Thanks, Chair. Good morning, everybody. So before I run through our normal progress report and sector update, what I'd also like to do is on your screens, you can hopefully see Ollie. So Ollie is an audit manager with Grant Thornton, and Ollie is going to be joining the audit team for the 2021-22 audit. So Ollie unfortunately couldn't be here in person today for you to see him in the flesh, but the next best thing, hopefully at least you can see him on screen, and when he joins future audit committees, you'll know who Ollie is. So really good addition to the team. Really pleased with that. And I know Ollie's already met with Lisa and Pauline and started to discuss with other finance colleagues as well. If I briefly run through our report on today's agenda. So if I start on agenda page 12, which is the page entitled Progress at March 22. As you know, we have two main responsibilities, the financial statements audit and the value for money audit. We are beginning our planning for the 21-22 financial statements audit. I know earlier this morning, Ollie and our team had a conversation with Pauline and other finance colleagues as the work begins in earnest next week. We intend to begin work on the draft financial statements in July of this year. The final paragraph on the financial statements audit section sets out the timetable for the 21-22 audit year. So this is the national timetable as set out by the regulations. So the council needs to have published draft financial statements by the end of July at the latest. And then the date for which audited financial statements should be published has been moved to the 30th of November for 21-22. So if you remember, for the last financial year, that date was the 30th of September. Nationally, it's been recognised that was a challenging timetable, and that timetable has been moved back to the 30th of November for the 21-22 financial statements year. Once we've undertaken our planning work, which, as I said, kicks off in the next few days, we will then issue our audit plan, and that will come to the next committee as a formal agenda item, but we'll issue that to officers in advance of that. We do note that at the moment, there's a couple of areas that are still under discussion in 2021-22. First, SIPFA have published an emergency code consultation. So the code is the manual, I suppose, for want of a better phrase, that tells finance teams around the country and local government how to produce financial statements. So it sets out the expectations for all different types of financial transactions. There's a code consultation that was run it was known as an emergency code consultation, effectively looking at the financial statements and what should or shouldn't be amended for 21-22 off the back of, again, the timetable that I know we discussed at the last committee, given that so few financial statements were published by the end of September last year. So we're mindful of that because that could change our approach in a number of areas. Property, plant and equipment valuations is one of the areas that was under discussion within that code consultation. And as you know, we've had a number of conversations about that around the time that it takes both us and finance colleagues to produce valuations, get valuations commissioned and reflected in the accounts. So that could change our audit scope. And the other areas is there's ongoing fee discussions nationally with PSAA between ourselves and other firms and also the audited bodies. Our aim, as I said, by the end of this month, we would have our audit plan issued and we'll bring that formally to the next committee. On the value for money side of things, this will be the second year under the new NAO Code of Audit Practice. So you saw the auditor's annual report for 2021. We'll follow up recommendations included within that, and you'll see a similar report for 21-22. Again, as with 2021, the timetable for that is within 3 months of the audit opinion date, that report would need to have been issued. Over the page on page 13, we briefly set out some of the other areas that we undertake. So we review the housing benefit subsidy claim in accordance with the DWP's required procedures. We undertook that work on the 2021 subsidy claim and submitted our findings, factual findings, to the department in advance of the end of February deadline. We've not had any response back from the DWP requesting any further formal clarifications or additional work to be undertaken. And the other point to note is that a number of the finance team attended one of our financial reporting workshops. So annually, we set out a workshop setting out any changes to accounting standards, financial statements, etc. So a number of the team have joined those calls as well. Page 14 of the pack sets out the summary deliverables and timetable as it stands currently. You'll note that we've got June for interim audit findings and the end of this month or beginning of next for the audit plan, with September currently being shown for the audit findings report and auditor's report. Again, we just need to continue to discuss with Lisa and the team around when the draft financial statements will be produced and what that means for then our audit timetable. Bearing in mind we need to have audited by the end of November for this year. I'll say one other thing, which is pages 15 and 16. So as you are well aware, the Financial Reporting Council, are our regulator. We set out some of the findings from their annual report in terms of file reviews that both they and the QAD, so the QAD are the Institute of Chartered Surveyors, Institute of Chartered Accountants, England and Wales. Sorry, you can tell how much time we have to spend working on property valuations there. Institute of Chartered Accountants of England and Wales, it's their quality review department as well. So we have a number of audit files audited, for want of a better phrase. This sets out the findings from the 2021 reviews and from previous years as well. So you can see some of the trend there. Clearly a positive trend for us, but work still to do. And we set out some of the areas there where we're increasing training and our procedures to respond to those regulatory reviews. The remainder of our report then today is, as normal, the sector update. So I don't normally go through these slides, but maybe articles or reports of interest to you as audit committee members. So I will pause there and ask for any questions.
Any questions from any of the councillors? Yep, Councillor Spencer. That's fine.
Thank you. Very, very helpful, very interesting. Can I just go back to the heading on page, our page 13, which is your report. Just find it a second. 5. on our page 13, you talk about events, and you talk about financial reporting workshops, and in the second line, it talks about network events for members. I don't know about the other councillors sitting around the table today, but the agenda today was very heavy reading. I wondered whether councillors around the table would benefit from some sort of update review, some sort of event that just sort of delved into the audit issues in a bit more detail, just as a reminder, if nothing else. That may not be the views of other councillors, but it would be of mine. So that was, can I just ask that question, whether that's possible or whether any other councillors want it?
Yeah, sure. So I'm happy to start that one. So it's absolutely things that as Grant Thornton we've done with other committees in conjunction with finance teams and internal audit as well. So it's certainly something that we could look to do. I don't know if Mrs. Buckle or other members of the committee indeed have any thoughts or comments on that suggestion.
Mrs. Buckle?
It's certainly something that we could arrange for members, and maybe the best time to do that would be around the time that the sort of draft accounts are produced for the audit committee to consider. And in the past we have done audit committee training whereby we've specifically looked at the best ways to sort of scrutinise a set of accounts, and we've done that by having some training from Grant Thornton, and we've looked at other authorities' accounts up and down the country. So that is certainly something that we could repeat if members would like that training, and we could either presumably do that online through Teams or as part of a physical meeting. Thank you.
I think we could possibly do a remote meeting, perhaps, would be time saving as well to do that. And you could do it, as you say, quite timely, just before the actual accounts presented as well. Any other questions? Another question, Councillor Spencer?
Sorry, last one. On our page 23 and your page 15, the subject of climate change is addressed. But unless I've missed it, there's nothing in here about what Grant Thornton are doing regarding climate change, and what your views are and what your policies and practices are, not in huge detail because we're only here for a few hours, but just can you give us some ideas of what Grant Thornton are actually doing to address the subject of climate change?
Absolutely. So if I can give you a really brief answer now, and then maybe, as I said, with time, come back and share some further details with you outside of the committee or for the next committee. So the report on page 23 is a National Audit Office report. So this is looking more at climate change and the role of audit and risk committees. As a firm, we have our own climate agenda, our own sustainability agendas in terms of looking at our carbon footprint. Clearly, as auditors, and as someone sat here today, I have a carbon footprint, and the audit team have a carbon footprint in coming to Southands to do an audit. And I think gone are the days now we recognise where we will be coming down here day in, day out, all week during an audit period. So I think part of what we do as an audit team, that isn't necessarily Grant Thornton as a global organisation, but as a team that you work with directly, is looking at how do we deliver our audits. So there are benefits, no doubt, of me being here in person, and for the audit team being in person and working with Pauline, Lisa and the finance team. But there's also benefits from a carbon and sustainability point of view of us doing some of that remotely. So we've talked about Teams meetings. We tend to have catch-ups probably once a quarter, if not more. Historically, they would have been in person. Now we've moved those to remote and via Teams so that we don't have an impact environmentally, and we can do those from wherever we are. Wider, I don't have the KPIs in front of me in terms of the firm, but those are the things that I'll look to share with you later on, if that's okay.
Any other questions from members? No? Okay, thank you. The report which is Grant Thornton's audit progress report and sector update, is purely for being noted by the audit committee. So again, I'd just like to thank Mr. Murray and Mr. Durbin for attending and answering the questions we had for them. So hopefully we'll see you again soon. Moving on to the next agenda item, I understand Mr. Measures would like to take agenda item number 8 first, because it follows one from the other better. So we'll be looking at the update on progress on the 2021-22 internal audit plan first, and then going back to the internal audit plan afterwards. So, Mr. Measures.
I think I'm going to introduce.
Councillor Pearce.
That's all right. Okay, don't worry. So as part of the internal audit reporting process, the audit committee receives updates on the progress made on the current year's audit plan. This is the second report for 21-22 and sets out the work carried out by internal audit up to the 4th of February against this year's audit plan, a plan that was agreed by this committee back in April last year. Progress has been steady, despite one half of the audit team, that is of 2, continuing to help with the processing of the latest government grants announced back in December to those who have suffered as a result of COVID. As a result, a number of audits have not taken place. However, as at the 4th of February, out of the 31 planned audits for this year, 8 had been completed with final reports issued and 11 were taking place. This is in addition to the 5 audits from the 2021 plan that were completed at the start of the audit year. Details of these are outlined at Appendix A and B. Overall, and based on the work performed to date during 21-22, internal audit can continue to give an opinion of reasonable assurance on the adequacy and effectiveness of the authority's internal control environment.
Thank you, Councillor Pearce. Mr. Measures.
Thank you, Chair. As the leader has pointed out, COVID has impacted progress on this year's report, plan. Since my last report back in December, one of my team has continued to assist with the processing of business grants after the announcement back in December of the additional assistance being offered. And therefore, it's just left my other auditor to continue to pick up work on this year's plan. But we've also had resource from Devon Audit Partnership carrying out a number of the other outstanding audits. As has been said, we have 11 with fieldwork that is in progress. Some of that fieldwork has come to a conclusion, and we're about to issue our findings in the form of draft reports that will go to officers, and we'll then await their responses to our recommendations. And we have a small number of audits that are due to commence. We continue to liaise with officers so that we minimise any interference with important operations that are going on and services being provided. We've issued 3 final reports recently, namely debtors, treasury management, and a follow-up to the performance management review that we conducted in 2021. And our findings and responses from officers are at Appendix B. I undertook a review of the plan with the Section 151 officer and the Director of Governance and Assurance, where we discussed and agreed which audits should go ahead and those that could be delayed or cancelled. That's usually in the face of changes in circumstance or resources. I'll take any questions that members have.
So questions, this is on agenda item number 8, which is the internal audit plan. Do members have any questions on that? Yes, Councillor Brazil.
Yes, thank you, Lars. I'm interested in the report that we've had back here on performance management, and the fact that this has come to us again, and again there is limited assurance. However, the overall direction of improvement is positive. So this is page 49. Just, I mean, obviously, from my point of view, performance management is, it is an absolutely crucial block or piece of the jigsaw when it comes to managing any activity or operation or or corporation or in this case, a local authority. So I have to say that I'm very concerned that we're still, you know, from your audit, and thank you for that, Dominic. I mean, that you're still concerned about it. I just wondered if you could give any sort of commentary on that, please. Thank you.
Mr. Measures.
Yeah, we undertook, because it was limited assurance in 2021, we naturally put the review in this year's plan. It's an area where there are some quick wins, but there are also obviously areas that will take time to come to fruition, where the recommendations can actually be implemented. So it doesn't come as a surprise that you know, some actions are still outstanding, but we are confident, in speaking to people like Mr. Hawke and others, that progress is being made. That's all I think I can add to that, Councillor.
Any other questions? Councillor Pearce.
I think I could add a little bit more to that. Performance management generally is a function of overview and scrutiny, and for a long time they hadn't been asking for reports, and I think something might have happened a bit earlier if they had. But the other thing is that Jim Davis, who has always been involved in setting out how this works, has been exceptionally busy on administering grants over the last 2 years. So I think that's held up progress. But I believe, and I haven't got it in front of me, but a report is expected at the executive on performance management within either this time or either this month's executive meeting. Sorry, it'll be next month now, or the one after. But I think the point is that the new corporate strategy set out a new environment for performance management, and it's been taken from there and will be kicked off from there on a kind of new basis. So and that hopefully will improve things quite a lot.
Any other questions from councillors? Councillor Spencer.
Thank you for the report, which I was initially quite disturbed by. I was disturbed because there were only 194 days out of 417 delivered, and I accept the fact that there are reasons, but nonetheless, I can only assume that the team involved were concerned about that as well. That equates to less than 50%, is 46% of the days allocated. And as I say, please don't get me wrong, I do understand the reasons. And I was concerned to see how they would be made up, if at all. But I note that a review was done at some point, and this is page 36 of our agenda. I note that a review had taken place. I don't know if I've missed it, but was there any communication to members about that review or about the detail of it? I'm not asking for operational interference on members' parts. I'm just asking whether there was any communication of the review and the results of the review. And on page 37, that there is a comment made about the middle of the page, well, 2/3 down. Overall, and based on the work performed to date during 21/2, internal audit is able to provide reasonable assurance. My understanding is that is reasonable assurance regarding the work undertaken, not the overall performance. So the bits that weren't undertaken have not been rated, if you like. So I just wondered whether there's any observations on that. And in the appendix A, I'm not sure what page 40, I wondered whether there would be any thoughts about the anticipated delivery dates for the actions anticipated, because that's not actually shown there, unless I've missed it. Thank you.
Thank you. Mr. Measures.
Okay, in response to those questions, as far as the members being informed, no members weren't informed. That meeting took place, I think it was just after in the new year. And it was a discussion, as I say, between Mrs. Buckle and Mr. Powell. Yeah, maybe in future we should be coming back to you before audit committee with our suggestions, and that's a point that we'll probably take forward.
It's in the results of that. It's in the report.
Yes, in this report.
In item 7, which is the plan for 22-23.
Sorry, well, I apologise.
Yeah.
I was talking about communication at the time, perhaps, but if it's there, I'll go back and reread it. Thank you.
Basically, what you see, the Appendix A and the comments in there are the results of that discussion that I had with Mrs. Buckle and Mr. Powell. As I say, if we can discuss if there's a need for sooner communication on that front, so that members are aware rather than relying on the next audit committee. So we can look into.
I apologise.
Yeah.
Not taking that on board.
And as far as the opinion of reasonable assurance, that is based on the work that we have carried out. You're right in that respect. It's not based on the work we can't count, because obviously we can't give an opinion on stuff that we haven't covered. However, the way I've been dealing with South Hams Council now for a number of years, so I've got familiar with your internal control framework and the fact that you've got, as auditors called it, the 3 lines of defence, and internal audit being that 3rd line. The first line being the actual coal face, and then you've got management and so forth. So I'm confident that I can give reasonable assurance on definitely on what we've covered, and to a degree on some of those areas that that haven't been covered.
Timescales on Appendix A.
You're talking about on Appendix A, the timescales. Can you just sorry, just
beg your pardon, my apologies. We're looking about housing benefit, for example, says summary presented to audit committee in December 2021. But under the last entry on that page, and I'm not picking on that for any particular reason, it says awaiting management response, but there's no deadline date. On page 41, under comments, there's no timeframes included in when these might be anticipated to be delivered.
no,
I don't even know that that's possible.
We have not, we don't include, kind of things like with the one that you quote at the bottom of page 40. Yeah, that is an audit from last year's plan. It was one that my auditor that is being seconded out was dealing with, and yeah, it's one of those that when he's back, he can chase up on. As far as giving timescales, I can start to give timescales, but in historically we've not given timescales as to when we're expected to have responses, etc.
But I don't know whether anyone else feels that timescales ought to be included, even if they're indications.
Mrs. Buckle, do you think you'd be able to give us some indication on that?
Yeah, I think that would be very helpful if we could include that information for members, Dominic, if that's possible. Thank you.
I'll ensure that that's in future reports.
Any other questions from councillors regarding agenda item number 8? Nope. There is a recommendation before us that it is recommended that the progress made against the 2021-22 internal audit plan and any key issues arising are noted and approved. Can I have someone propose that? Councillor Taylor, and seconded. Councillor Rowe. All those in favour? Is unanimous. So we move on to agenda item number 7. Councillor Pearce, would you like to introduce agenda item number 7?
I would. I'm just making sure I've got the right report. Yes, I think I have. Right. The public sector internal audit standards requires the head of internal audit to prepare a risk-based plan of internal audit activity that is designed to support an annual opinion on the effectiveness of the systems of governance and internal control within the council. This report outlines the process followed in producing the internal audit plan for the forthcoming year, 2022 to 23, that is set out in Appendix A. The plan is designed to offer flexibility to enable assurance to be obtained over current as well as emerging risks. As outlined in the latest progress report, the COVID-19 pandemic impacted on the internal audit's work during 21-22, whether that be a reduction in available audit resources or the impact on some services that were due to be reviewed by internal audit. As a result, a number of audits due to be undertaken this year have been delayed and now appear in the plan that is being presented today. With the pandemic still with us, the plan may well change and suffer from some reduction, all the while audit resources assist other areas of the council in COVID-related activities. Every effort will be taken to carry out the audits identified where it is deemed possible, with minimal disruption to officers and key services, albeit using alternative methods and approaches, with the expectation that an annual audit opinion will be provided this time next year. Thank you, Chairman.
Mr. Measures, would you like to comment on it?
Thank you, Chair. Yeah, it's this time of year when I present members with a list of audits that the audit team propose to undertake over the next 12 months. I've spent the last couple of months assessing those areas of the council that appear to be a priority for audit attention, following the process that's outlined, I think it's on page 29 of your papers. The plan always allows for a degree of flexibility and is not cast in stone, as has been proven by the last 12 months. COVID will continue to have some effect on our plans in the work that we do and the resources that are available. But I took the decision once again to set out a standard plan in terms of the available days, that's 430 days, and audits that we intend to cover, whilst recognising the need to take into account and where necessary examine the impact of COVID has had on council services, its functions and its resources. We'll continue to undertake our audits remotely wherever possible, which does bring its own challenges, but also some advantages and opportunities. As mentioned, several audits appeared in last year's plan that you've just, or this year's plan that you've just been considering. And following discussions with senior officers, it was agreed that these remain important areas to look at and therefore appear again in the plan for next year. I will take any questions.
Any questions on agenda item number 7 from councillors? Councillor Brazil.
Thank you, Chair. Yeah, a few ones. I noticed that this is sort of based on risk, and yet when I go through it, just some of the things jump out at me. That some of them are, I would say, we haven't been particularly good at as a council before, and perhaps we need to tighten up on it. Whereas other things seem to be going very smoothly, and yet we're giving the same amount of time to it. So if we go through it, for example, I'm particularly, if we look at capital expenditure, regeneration and investment strategy, well, especially regeneration and investment strategy. I mean, we've, as a council, we've wasted hundreds of thousands of pounds in various projects with that, and we're giving it 10 days. And then you've got Salcombe Harbour. I mean, I should declare that I'm the chairman of the Harbour Board. I don't think we've had any problems with the harbour whatsoever, and yet you're giving it the same amount of time to look at. That's just a sort of compare and contrast. Another bugbear of mine is also the leafs and the lags. I mean, I just think I mean, we're talking, on many occasions, we're talking about incredibly small amounts of money, £5,000 or whatever for a grant. I mean, quite frankly, I just don't think we should be wasting our time going through the minutiae of these grants. Local members and others should be perfectly capable of analysing those. I mean, I wouldn't be surprised. I mean, we've got our own locality budget grants and environmental grants that we hand out, and I mean, those are in the same sort of ballpark figure that are same as the leaf and the lag, and yet we spend an inordinate amount of time auditing these grants. So yeah, those are just a couple of issues. Thank you, Chair.
Mr. Measures, would you like to respond yet?
I'll respond on those. We've indicated an estimate of days. Salcombe Harbour and Dartmouth Ferry are ones that we do on a routine basis. Yes, they're quoted as medium risk, but we pick different areas each time that we review it. It's just so that we can give you assurance on those satellite areas. As far as the leaf and lag is concerned, that the money is passported, as far as I understand, through the district council and for West Devon, obviously through the borough council for their projects. And I think it is a requirement of the grant that the claims are audited, and therefore that's why we have the timing. I'd love to use 17 days elsewhere, but it is a requirement. And as it says there, the scheme has been extended up until November of this year. They were successful in getting some additional funding, and therefore I think it's an additional 5 projects, I think in South Hams, received, I think it was about £300,000 worth of funding. So yes, I would love to use those 17 days elsewhere, and hopefully in next year's plan I will be, because leaf and lag will have finished, and we won't have that the necessity to audit those claims.
Councillor Pennington has a question. Would you just switch your microphone on? Thank you, Councillor Taylor.
Just looking for it again. Give me a bit of time, will you? I'll come back. Oh yes, here you are. Page 17. It does state there a number of areas that would benefit from improved controls, and quite often this would appear to be linked to the available staff. Could you comment on that, please? Could you please comment on
Which page?
this? Is on, well, I'm on page 47.
That's better.
What's the problem? What is the problem?
Debtors.
This is from the previous report on the findings of the progress report.
Right.
If you wish me to answer that.
Yeah, if you could give Councillor Pennington an answer.
The resource, Mrs. Buckle might be able to help me out here as well. It's a question of the resources. At the time of the audit, the resources were being used elsewhere I think on COVID related issues. There was also a shortage of legal resource to carry out the necessary processes and actions. And as far as I understand, those issues are being addressed.
Thank you. Any other questions?
It's being addressed.
Yeah. It is.
How long is it likely to take?
Mrs. Buckle.
That will be within the next 2 months, Councillor Pennington. Yes. Thank you.
Any other questions from any councillors regarding that agenda item number 7? No. So the recommendation that's before the committee is it's recommended that the report be approved and the proposed internal audit plan for 22-23 at Appendix A be approved as well. Someone to propose that? Councillor Spencer proposed, seconded Councillor Rose. All those in favour? Is unanimous. I know Councillor Bastin wanted to present agenda items 9, 10, 11 and 12 himself, and he's due to join us slightly later on. We could take agenda item number 13 now, if Councillor Pearce would be prepared to present it. Councillor Pearce?
Yes, I wasn't expecting to do it now, but I will.
Sorry
It's all right.
spring it on you there. Would it be possible for you to present agenda item 13 now so we can clear it before lunch? It's
Yes,
the
no, I can do 13 now. Yeah, that's
whistleblowing the review of the
Yeah,
whistleblowing policy.
well, it is a review of the confidential reporting policy, I think it's officially called, which is due for an update because it hasn't been updated for some time. It is what it is, and it's there in the report, and I think the report says everything there is to say about it. So I don't need to say much more, but up to you to comment on it if you want to.
Mrs. Buckle, do you have any comments to make on that in terms of why the review was necessary and why it's come before the committee at this stage?
Yes, thank you, Chairman. Yes, I think the key point probably is in 2.4. So when we had our Grant Thornton audit of our accounts last financial year, Grant Thornton did specifically recommend that we look at our confidential reporting policy and update that before this year's financial end. So the head of legal has looked at that. The policy in the main has remained the same, so there aren't really any changes. We have just refreshed it where titles may have changed, but in essence it's exactly the same sort of confidential reporting and whistleblowing policy that the council has had in place for many years, but we have just refreshed the policy in accordance with Grant Thornton's recommendation. Thank you.
Are there any questions on agenda?
Well, the report itself was very comprehensive.
Yeah.
Very comprehensive, I thought.
Thank you. Are there any questions on agenda item 13? Councillor Brazil.
Yes, thank you, Chair. I was just reading through the report and looking at it. I was slightly concerned that there didn't appear to have been any input from employees, considering it affects them in the sense that if one of them chooses to whistleblow or whatever, and it did, and I would have thought it would have been useful to have asked employees whether they thought the strengths, weaknesses, whether it had worked, or if there were occasions where they felt they'd been let down by it, and that fed back into it.
Mrs. Buckle, do you have any comments on that? Were employees consulted?
I think that no, they weren't, not in terms of the refresh of the policy. I think all employees are aware of the policy because it's part of our induction programme, and we regularly remind staff of where the whistleblowing policy is. But if that's something that the audit committee specifically wishes us to, we can certainly ask staff that. We used to have a staff forum that hasn't been so active during the last couple of years as it was prior to the pandemic, but that's certainly something that we regularly have staff briefings, so we could include a slide on that to make all staff aware that the whistleblowing policy has been updated, and we can ask for feedback from staff as part of that. Thank you.
Is that actually a recommendation you're looking at putting forward, Councillor?
Yeah, I just, like I said, I just feel that it would be entirely relevant for them to be involved in this review process, because I don't know. I mean, I'm sure it's absolutely fine, and they may say we've got nothing to say, but they may go, you know what, we find this really, and that would be an important part of any review. So I appreciate that we're recommending that we adopt the reviewed confidential report, and that all staff in the next round of staff briefings. You see, the trouble is you're consulting them on something that's already been agreed, adopted, which isn't, you're not consulting them, you're telling them. I mean, those are back to front. I mean, what they should be is they should be consulted and then it should be adopted. I mean, perhaps we could change it to attached appendix 1 and 2 and subject to staffs being consulted at the next, something along those lines, really. So if they come up with something, I mean, they may not, and it may not be, and I'm quite happy to have any adjustments at that point delegated to yourself and the head of legal, chairman, as you see fit, really.
Councillor Pearce.
Yeah, just to note that, like any policy, this has got to be adopted by council. So it's not today's decision. Today's decision is for you to send it on to council. So there is a small interval, but it might be appropriate that in the circumstances, if we take it to annual council in May rather than the March council now. I don't know whether it's possible to do that, but I think it is with things like policies, isn't it?
So what you're suggesting is we consult the staff between now and May, and then bring it to full council in May as a recommendation.
Only if the whole of the committee deems that they think officers ought to be consulted on it.
Would that be possible, Mrs. Buckle? Is that possible?
Yes, that's certainly possible. We do have staff briefings coming up at the end of March.
And the fact that it's coming to full council gives us that window that so don't have to delegate it to you. I didn't realise it was a recommendation to get full council.
Right, so we have a recommendation on the screen which has been proposed by Councillor Brazil. Do we have it's seconded as it's an amendment to the recommendation that was put forward?
Yes, I will second.
Seconded by Councillor Pennington. The recommendation, therefore, that's coming before the committee is that the Audit Committee recommends to annual council that it adopts the reviewed confidential reporting policy and related frequently asked questions attached to Appendix 1 and 2, subject to, before the annual council meeting in May, all staff being consulted during the next round of staff briefings. So it's been proposed and seconded. All those in favour? Is unanimous, so that one is passed. Yes, Councillor Rowe.
Question on that, because that's fine, but the staff may not have be consulted before when our annual full council meeting is, I think, on the 23rd of May. So it will depend.
Staff briefings coming up in the next month.
Thank you.
I should have switched my microphone on then as well. Members would like a half an hour lunch break, is that right? Yes. So at this point, with the few agenda items left that Councillor Bastian would like to present, if we break at 1:45 and return at 1:15, then we can consider the final remaining items. Thank you.